Welcome to our Think Big series brought to you by PSG. I'm Dan Yehu. I'm the Chief Executive for PSG Distribution. PSG is a leading financial services group with an extensive national footprint, advisor footprint in South Africa. We also have a presence in Namibia. We've been in operation since 1998, and we pride ourselves on providing a bigger picture approach to our clients' financial needs, asset management, wealth management, as well as short-term insurance. We offer clients access to a wide range of insurance and investment products based on comprehensive advice. We are an advice-led firm, and our clients benefit from access to proprietary products and solutions, as well as a comprehensive list of third-party product providers and service providers. The Think Big series is a collection of dialogue with leading speakers hosted by award-winning financial journalist Bruce Whitfield. We aim to bring our audience independent insights that help them formulate their own opinion on some of our country's most pressing issues. Currently, we've just had the local elections, and the political parties are jockeying for position in forming coalitions in the different municipalities. This creates uncertainty, a lot of challenges. They continue to abound. But we think with arming you with the necessary knowledge, we better equip you to make and chart your own way forward. Our social media campaign, #ThinkBigPSG. This series is free, it's shareable, and open to anybody interested, whether you're a PSG client or not. In today's session, Bruce will talk with Hugo Pienaar. Hugo started his career as an economics reporter at Die Burger, a newspaper in Cape Town. During 2003, he was nominated as one of the best newcomers in the prestigious Sanlam Financial Journalist of the Year Awards. That same year, he left the media industry and helped establish a newly formed economic consultancy firm. Hugo was subsequently appointed as an economist at the Bureau of Economic Research, that was in 2006, and promoted to the Chief Economist in 2018, now taking the responsibility for the BER's macro forecasts. So we're in good hands today, and who better than Hugo to talk to us about the future of South Africa, the South African economy, which is always a very hotly debated topic. So without further delay, I'd like to hand over to Bruce.
Dan, thanks very much indeed. On to a Hugo of a different ilk, and this is Hugo Pienaar. Dan has given him a wonderful introduction. Are you as pessimistic as most mainstream economists are about the short, medium, and possibly even long-term future of South Africa from an economic perspective?
Bruce, I think over the short term, it is quite hard not to be fairly pessimistic. As we speak, or over the last while, we've had load shedding again. Of course, we just recently had a 3-week strike, a damaging strike in the steel sector, and of course, COVID is still around. We sort of fretting about a potential fourth wave. And as in the introduction was mentioned, we faced with some political uncertainty. So if you throw all of that in the pot, I think, yes, the short term does not look particularly bright. Although, I mean, one has to say that our recovery from the hard lockdown...
Let's get to that recovery in a moment, because I want to challenge the hypothesis of strikes and COVID and slowdowns and uncertain politics. I would argue, and I'm throwing a blindfolded dart at a dartboard here, half of the world's countries are in a very similar position, if not more. Everyone's worried about COVID, potential fourth waves, and what's coming next. Lots of countries have got really dodgy politics. Lots of countries have had a nice bounce back from the worst effects of COVID and have shown nice signs of recovery. Why is it about us in South Africa that we have this perpetual pessimism about the future? Because so many other countries, I mean, the French go on, I mean, if they had a national sport, it would be going on strike. They have more strikes than we do, I think. They just don't break and burn things nearly to the same extent. Lots of countries go through what we go through. Why is ours different? Why do we feel like we are different and special?
Well, Bruce, I guess because our challenges are so much more, right? So France does not sit with a 34% unemployment rate, right? And their developmental challenges are not, ours is just so much more. So the point is, we need to do better. We have so much catch up to do. So we really can't afford these sort of setbacks or own goals. Or let's put it this way: we can afford it much less. Than wealthier countries can. And of course, many countries do not have our energy constraints. Many African countries do, sure. But the countries that we really compete with, other emerging markets, do not necessarily have that.
It's that inequality issue. It's the Gini coefficient. It is this lopsided economy where a tiny handful of people earn the vast majority of money and pay the vast majority of taxes that have to support a bigger and bigger and bigger proportion of the population as this economy just fails to gain any kind of meaningful jobs-rich traction.
This is right, Bruce. So I mean, the recent medium-term budget policy statement made the point that expenditure on the so-called social wage in South Africa. So this is if you take not just the social grants, but you take education, schooling, etc., is 60% of our non-interest expenditure. Now, some of these expenditures, obviously, one needs to do. But we want to be spending on other stuff, right? We want to be spending on infrastructure and things that can create long-term prosperity. But your point is right. So we're becoming a society where increasingly people are living from handouts as opposed to being in informal sector employment and contributing to the tax base and creating prosperity. So yeah, that is obviously a huge concern, and it's been for a very long time.
Is there anything in the works that gives you an indication that that position changes at all in the next decade?
Bruce, I think if we briefly step back and think of the part of our GDP that's really been poor in the 5 years before COVID, and that was the investment, the fixed investment in environment, very much on the public sector side, the SOE side, the state-owned enterprises, but also on the private investment side. Now, we are starting to be a bit more optimistic on saying that if we can get all of these green energy investment plans going, so you think about this big energy reform, the embedded generation, the licensing requirement lifted to 100 megawatts. I mean, that's probably one of the biggest reforms we've had in this country, in the last 10, 15 years. Along with that, we have the IPP, or the Independent Power Producer programs, that have been delayed for sure, but there's some traction now. So I think one can look towards a better, if you take a 3-5 year view, a better investment performance. And of course, that investment over time then should lift this energy constraint, or this load shedding constraint that we've spoken about. So I think that's one important area that we really have to drive, is to get that investment momentum going.
And it's so interesting. I mean, the load shedding issue is a deeply emotional issue for so many South Africans. I mean, it's debilitating, it's frustrating, it's angering, but it is also the biggest drain. I mean, if I look at a Bureau for Economic Research graph of business confidence, and I'm going to use my best technical skills right now to just illustrate this graph to you, because I don't have a fancy PowerPoint presentation, but you'll get the picture. If I just hold my camera up to my phone up to the lens, that is business confidence in South Africa since 1975, all the way through to the present day. The end part of that graph is from 2008 onwards. It coincides with the Zuma administration. It coincides with the loss of electricity, and it's been perpetually below the confidence level, below 50. Business confidence over the last 50 years is more down below 50 than it is above 50. We have a confidence problem. And that confidence problem comes from the constraints within the economy, those physical and real world constraints.
100% right, Bruce. And I mean, it's not just power. I mean, just again, I've been reading through some comments from business people, and the problems at local authorities, the constraints on, whether it's water provision or just decent infrastructure being put in place. This is increasingly a burden on the private business sector. So yeah, so unfortunately, I think one can throw it under a broad statement to say that it's hard to do business in this country, and the cost of doing business is relatively high, and that of course inhibits investment. It inhibits people in companies expanding and employing more people, and all of that, I think then works into the psyche of business leaders in South Africa. It doesn't mean, of course, and I guess we'll get to this, that there isn't any opportunities, but as a broad sort of statement, there's a lot of constraints.
So many of the opportunities, however, stem from state failures. So private security stems from a social failure, it stems from an economic failure, it stems from a justice failure, it stems from an inequality failure. So there's 600,000 or 700,000 people employed in the private security industry. Brilliant, those are jobs, but they shouldn't be necessary to that extent. Private electricity, for example, private healthcare, private this, private that. South Africa's economy has been privatized for the 5 or 10% who can afford it, and the rest of South Africa has been left behind to be dealt with by the state, which doesn't do its job.
Yes, and of course, in some cases, one can argue that the state shouldn't have done these things in the first place, right? Or not to the same extent. So I mean, we suffer from these big monopolies, right? Whether it is Eskom, whether it is Transnet. I mean, the list just goes on and on. SAA, for example, why do we need a national carrier, right? I mean, the private sector can do these functions. Of course, there are certain things that the state has to do, right? And those things our state, unfortunately, does not do particularly well. But then there are other things that they presumably do not have to do that they also want to do, and that they also don't do well. If you get where I'm going. So I think and I must say, there are parts of government, I think, particularly in the Treasury, that is starting to make the argument that, look, we really need to think of what is the role of the state? What should the state do? And what other functions can we actually increasingly spin off into the private sector? And that's perhaps another very positive sort of development that we're starting to see. At least that this sort of a mind shift is starting to change, I think.
Well, I mean, apartheid didn't end because F.W. de Klerk, who died recently, of course, apartheid didn't end because F.W. de Klerk decided that he was going to be a better person. It ended because he ran out of money, and we could no longer sustain the civil war in South Africa. In the same way as the ANC cannot sustain a state that is costing more than it generates, and it doesn't add much value, and therefore it is being forced with its back into a corner to privatize SAA, to bring private players into different aspects of the state-owned enterprise network, something that is the antithesis of so many people within government. I recall asking Pravin Gordhan in 2017 in Davos why he didn't simply give SAA away, and he said, over my dead body. I've checked, he's fine, but they're doing it now because there is no other option.
Yeah, look, I can't put it better than that, Bruce. I think that's exactly the point, that we have this sort of developmental state approach, and for that to sort of work, you need capable institutions and capable SOEs that drive that. But unfortunately, we don't, right? And that they've been undermined for many years. Their balance sheets are shot, so the balance sheets are simply not capable to do the investment that is required. And I think you're right. I mean, that penny has now dropped, and what is left is, you need to involve the private sector to a greater extent. So I mean, it's unfortunate that it's taken us so long to get to this point, and we had to go through a lot of pain, right? But you know, I think at least it is positive that that recognition is now starting to appear, albeit that, as you say, they sort of be pushed. There really is no other option.
I mean, I've recognized for the past 12 years that I need to get to the gym. I haven't done it yet, and with obvious consequences. Recognizing it is one thing. Acting on it and actually making it happen is something fundamentally different. And there is an argument. I was chatting to the very capable Hilary Joffe the other day from Business Day, and we were talking about policy reforms and stuff, and all of the really good, positive noises that are coming out of the state. And she did do a stint at ESCOM during the days of Brian Damas. And her view is that, you know, in order to even privatize failing elements of the state, you have to have a capable bureaucracy to do that. And she's not convinced our bureaucracy's even got it together to be able to privatize effectively, which actually made my blood run cold.
Yeah, I mean, let's put it this way, Bruce. I don't think and this is not just a new thing. We can go right back to 2012 with the publication of the National Development Plan. It's not, I don't think the problem in this country is that we don't have decent plans. I mean, sure, we have some ill-informed suggestions on policy, sure, but in broad strokes, I think we have decent plans. And I think there's a sort of an appreciation of what the key problems is. But certainly the problem comes with the implementation or the follow through on these plans. That certainly has been dreadful. And whether it's a function of factionalism within the ruling party, ideological differences within cabinet, which I do think is a problem. You know, you can think of a number of factors, but the bottom line is delivery has not happened, and now the question is, will it improve over the next 5 years?
Well, there's the critical question, because what we've seen happening in the last week is the horse trading and the setting up of coalitions and unlikely bedmates getting into bed with each other. They're grimacing. Nobody likes the arrangements that are being made, but there's some arrangements that simply cannot happen because there is so much mistrust between political parties, and with real justification. And we're beginning to see that sort of settle down a little bit now, and we can get an idea of the lie of the land. I wonder if you take any encouragement at all from the local government election results, where the ANC got the biggest hiding that it has got in 27 years, where the EFF was shown to have a limited appeal despite a really comprehensive election campaign, where the splinter parties and independents came to the fore with promises of doing better. I wonder if you take comfort from that.
Yeah, I think it's interesting, Bruce, and I think there's probably a couple of angles here. I think the one is on let's talk about populism's appeal in South Africa, and the fact that we've now come through a unprecedented crisis, which has worsened our inequality problems, and despite that, the EFF seems to have a ceiling at around 10% of support. So that, I think on one level, that must tell us that this electorate is not, the appeal of populism is not that high. So I think that is certainly one positive I think one can take from the election. Of course, you know, you have to, again, caveat that by saying that lots of people, of course, just stayed away and decided not to participate in this process at all. But even so, I mean, those that did participate did not overwhelmingly support a sort of a populism ticket, if you want to put it that way.
I mean, I would go with the argument that if you are a populist party, you are going to get your supporters, as many as you possibly can, to come out to prove your point. If you're the ANC, you can traverse the country as much as you like, and so Ramaphosa did precisely that. And if your voters are cross with you, they stay away. And so the ANC has got a high disapproval rating. The EFF's approval rating simply didn't manifest. If you live in social media world, social media world tells us the EFF should have 90% of the popular vote in South Africa. There is just this massive disconnect. And from an economic perspective, that should be seen, I think, as a positive.
I agree. Yeah, 100% agree, Bruce.
Failing municipalities. We've seen in the last year or so, Astral Foods take the Lekwa municipality, which is around Standerton, to court. And the Lekwa municipality failed to act on the court order. So Astral took the presidency to court and forced National Treasury to appoint an administrator into the Lekwa municipality. And I chatted to Chris Skitter fairly recently, and he was saying things are going better. They're by no means perfect, but they can see the possibility of a turnaround. Where Makanda ran out of water and Gift of the Givers went in, and 3 days later there was water for the residents of Makanda. Where the Charlotte Macleika Hospital didn't have water and a borehole was drilled, and there was provision made. In the areas around the old Lichtenburg and those municipalities where Clover voted with its feet after years of trying to get the municipality just to fix potholes and provide electricity and water on a regular and repeatable basis, failed to do so, moved a 3 billion rand cheese factory to eThekwini. We're seeing some very deliberate moves in failing municipalities, and surely that vested interest element of it has actually got to cause a fundamental shift in the way that those local politicians think, because if everybody takes their money away, there's nothing left to steal. So you would think you'd want to encourage people to stay as long as possible.
So Bruce, I think that, along with another angle on the election, is perhaps the point of accountability. So if I'm a municipal manager and there's no feedback mechanism, I don't get punished at the polls, the local companies continue to pay their rates and taxes despite dreadful municipal delivery, there's no incentive for me to really change my ways. Well, now we've seen in this election, the ANC got a big clap again in terms of their electoral support. And as you suggest, companies are voting with their feet, and they are sort of moving out of these underperforming municipalities. So I think all of that, companies, voters are now sending a signal that, look, we're not going to take this, and you need to improve, and that must be positive if one thinks into the future. I mean, a competitive electoral system is the way to go, right? To keep politicians on their toes, so to speak.
I thought you were going to say to keep politicians honest, and I'm not too sure there's an electoral system in the world that could actually achieve that. When we look, though, at the economics of South Africa, I'm going to read you a quote, and it comes from 1943. It's from a man called Cornelius de Kibbet, who was born in the Netherlands, came to South Africa, was an historian, I think at Wits, and ultimately went and became the master of Cornell College in the United States. So a massively respected 20th century historian who in 1943 wrote, "South Africa progresses through economic windfalls and political disasters." And it is this most wonderful, succinct view of South Africa that is 80 years old. And I wonder whether things have ever been any different in South Africa, and whether we're simply going through yet another one of these political disaster periods that de Kibbet wrote about in 1943.
Yeah, so Kees Bruggemans, the former chief economist at FNB, used to often use
also
that
Dutch,
quote.
By the way. Yes, okay, sorry, these Dutch guys, yeah.
Correct. Yeah, and I think it is very apt, Bruce. If and that you mentioned that business confidence indicator of the Bureau earlier. So within that indicator, we have a question in the manufacturing survey about constraints on activity, and the one constraint is the political climate. So is the general political climate a constraint on your business? And if you plot that against that business confidence index, it's perhaps not surprising, but there's a very nice correlation. And you've mentioned that confidence is perennially low. Well, South Africa in our history, we've often gone through political crises, right? But at the same time, we've had these sort of economic windfalls. If you think about the gold price in the 1980s, so terrible political times in the 1980s, but we had a very high gold price, and at that time, of course, the economy was dominated by gold. So and you can think of this year again, right? We're being bailed out by very high commodity prices. Our terms of trade is at a record. Current account is suddenly in a surplus. Fiscal revenue, well, it's not great, but it's a lot better than we thought in February. So yeah, the history does seem to be repeating itself on that score.
Where it's different this time, though, is that by the time we get to the budget in February of 2022, we're going to have more than 4 trillion rand in debt. The component of paying back the money that we borrow, and thank goodness most of it is rand denominated, and that was, of the many things Trevor Manuel did right, that was one of the key ones, because we'd be in all kinds of different trouble if we dollar denominated our debt burden. But we're going to have 4 trillion rands worth of debt. We're going to have very little money left in the fiscus, despite the tax windfalls of this year. And unless we can somehow replicate this 5% recovery that we're seeing in 2020 in outer years, we are going to run out of money. And I don't know what happens at that point. Do you?
Well, so first of all, we need to prevent getting to that point, of course. But if you do, well, then of course there are a couple of options. The one that inevitably happen is that people go to the IMF and they sort of try and negotiate a bailout package from the IMF. But that is not. There's no free lunches, right? I mean, that comes with sort of harsh. I mean, people often talk about austerity in South Africa. We haven't seen austerity in South Africa. You know, if you get an IMF package and they sort of take over your finances, you know, then you really start to feel sort of pain in terms of having to cut back and live within your means. So that would be the one option. Which is perhaps the lesser of, I mean, it's not great, but it's the lesser. The worst case outcome is, of course, that you default on the debt. So you need to get to the IMF and a bailout before you reach a default point, because then then you're in a whole different ball game. I mean, it's very hard then to get investors back to buy your debt.
So how then do we prevent ourselves from getting there? I think we've been a mixture of luck and a little bit of good management, fiscal management by Tito Mboweni, and now Enoch Godongwana, the new finance minister, looks like he's pursuing the same sort of fiscal goals and going down the same path as Tito Mboweni was. He'll be a smarter, I think, and more tolerant political player in the game. But the consolidation that they are trying to enforce is one way of doing it, but without growth. Without getting real stimulus into this economy and getting confidence into the economy and getting businesses built to create the jobs, to get the taxpayers to provide the funding, to get the virtuous circle moving again, I'm not sure how else we do it on a sustainable basis.
No, this is right. I mean, you can cut back expenditure and you can continue with that, but that is not a sustainable way to do it. You need to get your expenditure and revenue in line with each other. So I think at almost at the same time we need to get growth going, get the revenue base higher, but then also sort of cut back on the, let's call it, the less productive spending. And if you can get both of those things going at the same time, then of course you have a fighting chance. The bottom line in terms of the fiscal arithmetic is that the cost of our debt, so long-term interest rates, are in nominal or in real terms, are higher than our growth rate. And that is not a sustainable position. So you need to turn that around and get growth more or less and preferably higher than the cost of our debt. Now, that's easier said than done given where we are, but that is the ultimate goal and the way that you sort of correct the fiscal situation.
So how do we get growth going?
Well, we've sort of spoken about, ad nauseum we speak about the reforms, right, or about the reforms. we've started the conversation about power, and I really think, I know we harp on about it, but we should not underestimate the constraint that is on this economy. So we really need to get the private sector generation going. I mean, it's ridiculous, Bruce. We had stage 6 in 2019, right? The Eskom management said to the government that, look, the only way that they said to me, Eskom can't fix this, right? We can do our maintenance, but we need 4,500 megawatts of additional private sector power. There's been zero added since we've now 2 years later. So we really need to get that going. And then in broad terms, I mean, I just think the regulatory burden on business in South Africa is quite extreme. But all of these things add up as costs on business. So we need to have some way of sort of correcting that and just make it easier to do business in this country.
Again, we pay lip service to it. I mean, our president, who has had a sojourn in business, he chaired MTN, one of the most commercially successful businesses on the African continent. He chaired Bidvest, for goodness sake. He didn't attend any board meetings the year that he was chairman because he was kind of busy with Shanduka and other things. But he has had business exposure. And certainly the corporate sector had a bigger effect on Tito Mboweni, who spent some time on the Discovery Board and AngloGold Ashanti and one or two others, than it did on Cyril Ramaphosa, certainly from an implementation point of view. Cyril Ramaphosa talks the talk, but you can't do everything, I suppose. And if you're not surrounded by like-minded individuals within your cabinet setup, you can't really drive that reform agenda too far.
Agreed, Bruce, and I think it goes even further down than cabinet. The officials within departments that really have to implement these policies and engage with the private sector and the regulators. I mean, so there's so many facets here. You think about NERSA and ICASA and the important role that they play in getting these reforms implemented. So the sort of skill base right across these institutions, I think there are issues there. So I think even if we all agree in cabinet, the question then is, will we still be even then will we be able to implement? So I think there's deep lying skills deficits that need to be corrected, and I think that is precisely why it's taking long, because it's not you don't do that overnight.
But you then look at Transnet, and Transnet is badly broken. Brian Molefe did his best. Siyabonga Gama lost his job over allegations yet to be proven in court of corruption. We've seen PRASA collapse. We have seen so much go wrong within that really important fundamental infrastructure part of South Africa. Transnet is losing kilometers of power cables on a daily basis. Miles of rail lines are stolen. People build settlements over rail lines that are not being used because the trains aren't running, for example. And so Portia Derby comes to Transnet and she says, I have a plan, but I need 100 billion rand. And this to me was like the great moment for South Africa, because every banker I talked to said, well, we're willing to lend the money, but we need to see what the return profile is going to be. Give us that, and then we can make a risk-weighted decision as to whether or not we do this. But we're very keen to do this. So there's no shortage of desire, will, money to actually begin to address some very fundamental problems. It is just the question of getting the blimmin' red tape out of the way so that we can get this done.
Yeah, correct. And if I may just use another example coming from Eskom recently. So we have the Public Finance Management Act. We have lots of procurement regulations. And granted, I think some of these regulations have been tightened in the wake of state capture, right? So for good reason. But of course, there are unintended consequences of these regulations. It is difficult to operate. So it takes so long for Eskom to get approval to do anything that also leads to delays, right? So so I guess we need a better balance between, obviously you need to have regulations in place to prevent corrupt activities and so on. But wow, I mean, we also need in some case, I mean, we now presumably have a capable corrupt-free management at Eskom, right? Geez, but now we must give them the tools to actually do what they need to do.
I was chatting to Andre Director the other day, and he said he had to spend 80,000 Rand on something. It was wires or little, I don't know, copies or whatever it was. It doesn't matter. He needed 80,000 Rand. He needed to write to National Treasury to ask for the money. 2 months later, the approval hadn't come through. So he spent the money anyway. And he said, look, I'm going to get into trouble for it, but I just can't wait anymore. And it's that sort of the PFMA, the Public Finance Management Act, sort of got itself into this position because of the vast amounts of corruption that have been prevalent in the public sector for so long. So you shut down all avenues of corruption. And you also then, this was Helena Wasserman at Fin24 the other day saying, the right hand doesn't know what the left hand is throttling. And it's that unforeseen consequence of, closing doors the whole time to try and manage a rotten system.
Yeah, 100%. And of course, it's also all of these things are also consequences of spending beyond your means, because now the purse string is so tight that even stuff that you really need to do, you think twice before you actually allocate money for these things, because there's so many other demand. So I guess again it comes back to this story of I almost want to say growth fixes so many things. It's this sort of virtuous cycle that you then get going.
But growth needs political willingness. It needs government to say, we can't do this. We've shown ourselves to be inept. We're going to go and do other things, whatever that job is going to be into the future, but we're going to let this thing fix itself. And we're going to allow for more unconstrained growth into the future. But you guys publish, and I found this the other day, the Political Constraint Index, which I'd never heard of before. And that seems to be the biggest constraint. It's not capacity, ability, lack of resources, lack of willingness, lack of eagerness, lack of a desire. It's political constraint. How do you measure political constraint?
Yeah, so Bruce, this is in our quarterly manufacturing survey, where we list a number of constraints. So these are the respondents are sort of senior executives in manufacturing firms. And then we list a couple of constraints. The one would be demand, whether there's good demand for your products or not, the tax system, the cost of credit, and then a sort of a broad statement, the general political climate. So we don't really sort of, we're not specific about it. So I think over time, people have grouped this labor issues, they will probably group under the general political environment, policy uncertainty. I mean, obviously in the third quarter with the looting shock, that political climate shot higher. So I think there's a number of issues that people or respondents, when they answer that question, are in the back of their mind. Load shedding may even be considered as a sort of well, they may throw that under that, which is not necessarily it is. But the point that you make is right. I think the general uncertainty surrounding where policy is going, what is happening with the political environment. Yeah, that is a constraint, and I think especially on investment, Bruce. I mean, people go on with their day-to-day business. They have to. But the key is if you are uncertain about these sort of things, you're not going to expand capacity, at least not in South Africa. You may go offshore, as of course we've seen with many companies, but we need them, of course, to do it here.
And they need the incentive, the environment in which to do it. You cannot blame anybody who's responsible for investing other people's money for looking for the best destination for that money. It is a governance and a fiduciary requirement. You can't just keep throwing good money after bad. So the responsibility then is to create an environment that is more conducive and enables us to create a baseline for growth, for opportunities for people to improve their lives, because the alternatives are actually disastrous. I mean, fundamentally believe we're in a better position now than we were 3 years ago. The Zondo Commission has made us feel worse because now we know what was happening in the Zuma era. The economy is in a weaker position as a result of so much of the thievery and skullduggery that was happening during that Zuma era, which has now been exposed, and that's not been helped by COVID. Our unemployment rate is worse as a result of the lockdowns and the slowdowns of COVID, but so much is less bad than previously. And just the tone and the rhetoric of government is fundamentally different to what it was 4 or 5 years ago. One's got to have a sense of we've got a better chance of fixing ourselves today than perhaps we had 5 years ago, or not?
I think undoubtedly so, Bruce. I mean, we all get frustrated that the progress is slow, and it is slow. But there's not zero progress, right? I mean, if one thinks of, I just take the revenue service, for example, how that was undermined during the Zuma years, and how, you know, that has been, well, I don't want to say it's been fixed, but certainly there's a hell of a lot of progress that has been made under the new management. The National Prosecuting Authority is another example. Yes, very slow movement, but presumably the right people are in place there. And I think a number of institutions, you have a similar situation. The SOEs we've spoken a lot about. Eskom is under severe strain, but they are not under severe strain because the current management, in my opinion, are doing the wrong stuff. I think they are focusing exactly on the correct things, doing the maintenance. But of course, while you are doing that, you're shutting down units. You have load shedding, and we're all very frustrated about that. But this is, unfortunately, you now need to go through this process, the correct process. It is painful before you get to the other side. So I think, Bruce, the crucial thing for me is that it's going to take time, but in a number of areas, which was not the case 5 years ago, we are at least focusing on the correct things. But it's not like it just, excuse the pun, but you can't just flick a switch and the lights come back on after they've been off for years, right? It's going to take some time.
How do we inject confidence? I mean, if you were talking to Helen Ziller right now, she would say, "Who stop you? You've got what was the Swedish thing where you're captured by your kidnappers, Stockholm syndrome." A lot of South Africans could be accused of having Stockholm syndrome. You're in this mess, you can't get out of it, so you better make friends with your enemies and go ahead and try and make a plan. How do we not get caught in that Stockholm syndrome thing, but also not get drawn down by the negativity and actually go out and begin to grow and expand and develop enterprises, businesses, opportunities, of which there are plenty? We're just quite frightened of taking them.
Yeah, Bruce, I think even during the state capture years, what really saved us, and you can think of a number of things, the independence of the judiciary, for example, but I think another crucial factor is just the role that civil society played, and to sort of push back against the things that went wrong. Now you're starting to see local communities coming together, and where service delivery is particularly poor, they're simply saying, but we're going to do it for ourselves. Now, once again, it's terrible that we've reached this situation. But on the other hand, it's very positive, I think, that people are not just sitting back and sort of accepting this. They are coming together and making a plan. We say that a boer maak 'n plan. Well, certainly we're seeing this in numerous. Now I think, but that's not a sufficient condition to get us where we want, right? I mean, you need that, but you need it. But more importantly, you then need an interplay between a more capable state that is delivering better. Civil society continues to play their role, and the private sector then comes on board in terms of support, whether it's financing or investment, if they can see more notable improvement on the the reform, the policy, the political front.
But there's a fair amount of evidence of fatigue creeping in. We keep talking about Boeremakeplan and South Africans are so resilient, and look how they stood up for themselves during the riots in Durban, and people manned the barricades. It was like Paris in 1789, and and you get these wonderful stirrings of pride and relief and joy. But you can only do this stuff for so long. The state has to step up. The state has to be made to do its job, and if this state won't do it, then the next one must.
Correct. And again, the proof is in, well, one important proof is in the investment ratio. So, I mean, our fixed investment as a percentage of GDP, it peaked around 18%, 2008, 2009. The first half of this year, it was 13% of GDP. Now, that's private and public. Now, you mentioned the word investment strike. So I hate that word, especially if it's on the private sector, because I think you're 100% right. They are not doing this because they are unpatriotic and they don't want to invest. They are doing it because the environment is not conducive. So yeah, I mean, I don't want to repeat what we've said already, but if that environment becomes more, look, let's put it this way. If that environment stays the way it is and it's not conducive, that investment ratio is simply not going to pick up, right? And we're going to continue to sit here at very low levels.
I remember Tony Treyer having a strip torn of him publicly by Thabo Mbeki because he raised the issue of political risk in an annual report, an Anglo-American annual report. Could have been 2001, 2002. And the sort of stuff that was going on in the background of South Africa, the slow meltdown of municipalities, the slow destruction of governance, was visible and was being noted by people who were very sensitive to these things. And government was reluctant to acknowledge it, didn't want to admit the fact that it couldn't control everything. And the wheels came off. And it's at this point where private citizens have to step up and really reclaim, I suppose, the South African economy, because we can't keep doing the things the same way as we've been doing for the last 25 years, because that is surely a path to disaster. My comforting point as we wrap up today is that we are now so cognizant of the problems. The next step is to fix them.
Yes, 100%. And as we mentioned earlier, it's not that we don't know what the problems are. They've been diagnosed from A to Z. It is really now just, can we get to a situation where you have a president, a cabinet that is on the same page. So we have a ANC elective conference next year, December 2020. Can we get to a point where we have the president that has a decent majority? He is in a better position. The radical economic transformation faction in that party has sort of been rooted out to a large extent, and we can really have an aggressive approach towards reforming the economy. And I think it's not inconceivable that could be the case. We still need to get there. But yeah, so I think we shouldn't lose hope, Bruce. There's a lot that's wrong. There's a lot that needs to be fixed. But to come back to your earlier question, I do think we are in many facets in a better position now than we were 3 years ago when President Ramaphosa came to power.
At that point, we will leave it. Hugo Pienaar, thank you very much indeed. From the Bureau for Economic Research, Dan Hugo on the other side, over to you.
Thank you, Hugo. Thank you, Bruce. I really appreciated listening to you. The fact that you highlighted the issues that we have as a country, not just the issues, but also how they can be fixed. I think that is fantastic. But it does sort of lead us to, the position that our clients are in. Bruce, you referred to the Stockholm syndrome. We become captured by the situation that we are in. But even though we are on this path, there are positives. We're on this path to fixing our economy, creating certainty, or trying to create certainty. How do we actually go about still making investment decisions, taking decisions on our insurance portfolios? We can't sit back and wait. We are faced with making these decisions on a daily basis. And we believe a skilled and trusted financial advisor can be invaluable during these uncertain times. They can provide you with objective insights, help you consider alternative scenarios, so that you can really make considered, rational decisions on your wealth insurance portfolios as well as your investments. So if you have an advisor, I want to encourage you to engage with your advisor. If you do not have an advisor, please get in contact with us. We are contactable via our website, and we'll put you in touch with an advisor. And then, be sure to register for our next exciting speaker. We kick off 2022, the 2022 Think Big series. Our first speaker next year will be Professor Bonang Mohali. He's the Chancellor of the University of the Free State, and we want to talk to him about the future of economic policy in South Africa. And with that, hope to see you next year. Keep well, stay safe, enjoy the holidays.